The government, for example, has done quite a lot of fantastic work since last year to stabilize the Kenyan shilling, to manage inflation, and to have a more friendly policy environment for business. There are two aspects to this. The first bit is the changes you're seeing in the market have not happened by themselves. There's been reforms, as I said, and strategies and market initiatives that we've been doing. Last year was a good run, no doubt about that. This year, we are off to a fantastic run as well. In fact, most of our indices are above 44% year to date. That said, we are barely at the top of the market if I look historically at where the NSE used to be. It means you're not too late to come into the market now. In fact, if anything, if you're listening to this podcast, if you have not opened a trading account and started trading, investing in the NSE, then maybe I'm not sure how else we can assist you.
Hello, welcome to another episode of Make Money the Podcast, the show where we not only tell you, but also show you what's happening to your money and what could happen. Of course, this is usually guided by conversations with our experts of money, and I'm happy to introduce the topic for this week. We talk about the Nairobi Securities Exchange and precisely the equities market. What we've seen is a recovery of that market. Sentiment has changed. If you do remember some of our previous conversations right here, there was quite some pessimism around the market, and I believe then we spoke to Mr. Wesley Manambo, who's an equities analyst at Standard Investment Bank, and he made the point that he was worried whether people still saw the market as a place to make money. Fast forward about now more than a year and well into our second year, what we've seen is that market enthusiasm returning. The market was up 30% last year and is already up by over 40% so far this year to date. And to get this conversation to help us know what's happening and what are the factors driving this recovery, I'm happy to introduce the guest for this week, Mr. Lloyd Frank Mwiti. He's the Chief Executive Officer for the Nairobi Securities Exchange. Mr. Mwiti, thanks for being here.
Thank you, Kefa, for having me.
Yeah.
I'm really happy that we are having this conversation, so I'm looking forward to the discussion.
And it's taken quite some time to get you, and I'm happy that finally we've been able to sit down and have this conversation. So let's start off with this recovery. What I did say at the introduction is there was quite the pessimism, say the last 10 years. We can put it plainly and say the last decade has been pessimistic. People ran off the market. People didn't believe our podcast is make money. People didn't believe you can make money at the Securities Exchange. But we've seen that picture turn. What are the factors mostly driving that?
For the previous 10 years, 2023 back, the market really has been fairly flat. It is true that the pessimism was quite pronounced, and also it is true that matters to do with, for example, listings, etc., were non-existent. If you fast forward that to last year, 2024, the market started coming back, as you've said, and this year, equally, the market is looking really good. We are up already more than 40%. What are the factors behind that? Let's start with the economic policy environment, macroeconomic policy environment. If I look at some of the examples I can share, the government, for example, has done quite a lot of fantastic work since last year to stabilize the Kenyan shilling, to manage inflation, and to have a more friendly policy environment for business. And then beyond that, ourselves as NSE, we've looked at coming up with new market reforms to enable people to come to our market easier, to make it easier for people to understand our market, to make it easier for people to trade our market. So we started those reforms last year, as you know, and hopefully we'll touch on it. We were voted the best performing exchange in Africa last year. Yeah. If you look at the macroeconomic environment, you couple that with the market reforms that NSE is driving, over and above the new strategy we are now implementing, hopefully that we'll talk about here. Yeah. That has really been part and parcel of getting the market back, as you've said. Of course, related to that also is from an equities perspective, i.e. our listed shares. Yeah. They've also benefited from the government's push to drop the yield, the interest rates on treasury bonds, treasury bills. So investors have had to reallocate their investments away from some of those government instruments like treasury bonds, treasury bills, infrastructure bonds, and reallocate that capital to the equities market. We've also, of course, been pushing for our listed companies to provide more information about their business, how they are performing, what strategies they are implementing, because that is what investors engage with. And then on top of that, we've also been doing quite a bit of work reaching out to foreign markets so that they understand and have visibility on how our market is doing, So we've also seen foreign investors showing a lot more interest in our market. So it's a combination of different factors. But what I can assure you is we're just getting started. And we'll talk a bit more on why, when I say we are just about, the journey is just beginning, and that people, it's not too late for your audiences out there who are keen to invest in the market to come. We will talk in a bit more detail about that.
You came into the market right around May last year.
Correct.
And so what we've seen with your terms of is that it's aligned with the returning market enthusiasm. Do you feel that makes the job easier perhaps versus someone who was there before and the market perhaps wasn't as promising as it is now? Does it make the job easier?
There are two aspects to this. The first bit is the changes you're seeing in the market have not happened by themselves. There's been reforms, as I said, and strategies and market initiatives that we've been doing. You're right, I took up the CEO role in May last year, after a bit of convincing, of course. And the first order of business was to first understand the issues that are making it difficult for the market, the NSE, to come back, and to start looking at quick wins to get the market going as we talk about the more long-term initiatives. So in some ways, the timing was good in the sense that I was coming into an organization that needed reform, that needed fresh breath of air, a different way of looking at the organization, but also an appreciation of what the challenges are and why we need to tackle them head first. That said, what will form the bedrock of continued success and growth and, of course, returns for investors who are investing at the NSE will be our dedication to implementing our new strategy and our dedication in taking feedback and taking that feedback and acting on it to make the market better. So, yes, timing has an element to do with it, but it's more about now what. And so hopefully as we have this discussion, we can touch on some of the initiatives we are doing to make sure that this momentum is sustained for the long term.
You've spoken of the opportunities that still remain. Yes. The market was up around 34% last year. So far, like we said, around 40%. Someone out there may worry, did the train leave the station and left me waiting? And are there still pockets of opportunities so that to say that basically what we've seen, the turnaround is not over. There's still some upside to go, what we technically call as upside. If you'd speak to that for someone with that question.
Okay.
Is it still time for me?
Okay. Last year was a good run, no doubt about that. This year, we are off to a fantastic run as well. In fact, most of our indices are above 44% year to date. That said, we are barely at the top of the market if I look historically at where the NSE used to be. So to start off with, it's not too late. This is the time to actually even come to the market now with a lot more seriousness and intention, because you now have data for more than a year.
Yeah.
You have, at a minimum, you have 2 months, or let's say 18 months worth of data on how the market is performing. Mm-hmm. We are getting started. This is the time, number one. Number two, the impact of the new strategy is just starting to come in. Remember, our strategy is a 5-year strategy. By the end of 2029, where the market is now, and where we intend for the market to be, this is the time to come in and actually ride a fantastic upswing in the market. Number two, we are making it easier for people to come to our market. A good example, 2 or 3 months ago, we introduced a change in our market to enable people to come into the market and buy even 1 share. Forget about buying the minimum 100 shares. That used to be the case since the beginning of time. So the ability to come to the market much easier with whatever budget you have, this is the time. Number 3, we want to also make sure that we have more quality listings, new IPOs coming into the market as part of the new strategy. Which means, number 1, if you have not invested in the market, you should invest in now, because you already have good quality existing listings, companies that are listed on our market. But also, it also gives you a good opportunity to be ready to also participate in upcoming issuers that are coming in, whether it's IPOs, whether it's new debt instruments that are issued in the market, etc. If you look at our new strategy and our metrics on where the market should end up, if we are not 10, 50x above where we are, I think we'll have failed in implementing our strategy. But if we get it right, and so far we seem to be getting it right, at least that's what the numbers are showing, it means you're not too late to come into the market now. In fact, if anything, if you're listening to this podcast, if you have not opened a trading account and started trading, investing in the NSE, then maybe I'm not sure how else we can assist you.
But
this is the time. Now, Kefa, I said this very thing last year. Those who listened came in and they enjoyed. So here I am in October saying between now and the end of our strategy period, the upside looks fantastic. Remember, the market is not even back to the highs it used to be in
2014, 2015. Yeah.
Correct, yes. So this is the time to come.
Let's speak of identifying the opportunity as an investor. Mm-hmm. When you speak to analysts, or technically speaking, there's a lot of things to look at. There's always price-to-book ratios, price-to-earnings ratio. Yes. A lot of the times analysts come out and they tell you, the market is undervalued, but sometimes people are not always buying. What's the best thing to look at when you're making the decision, especially as a retail investor? You want to get into the market, and there's a lot of metrics you can always look at. What do you say is the key thing to look at once you're making a decision like, hey, I want to have some exposure into equities, but there's so much information, there's so much ways to analyze the market. What's the best way for you would say?
That's a very good question, especially for people who are looking to come to the market for the first time. It's not a very easy question to answer because different investors have different reasons why they're coming to the market. But let's look at it in, let's say, 3 dimensions at a minimum. The first dimension is you're coming to the market because potentially you're looking for dividends. You're looking for some income out of the investments you make. So you're looking for opportunities where you will get some, let's say, a dividend every so often. Ideally, it means you'd be looking at companies that have a track record paying out dividends. They are there. They are well established. The banks, the likes of Safaricom, BAT, East Africa Breweries, you have quite a number of entities that are very well known to be dividend-paying companies. So in that scenario, if that's the reason you want to invest and be earning a dividend over time, then you'd be looking at which of these companies have a track record, a well-proven track record of paying dividends regularly and good dividends for that matter. That's one way to look at it. The second way to look at it is growth. So you're not necessarily looking for dividends, you're looking for investing in shares that grow over time. Okay? In that scenario, you want to look at, for example, a sector view where you say, which sectors are looking more promising in terms of growth? Which companies in those sectors have very well articulated strategies on how they are going to achieve their growth? That gives you a sense of which of these entities should I invest in, because over time, the shares will grow in value. We have regulations on giving financial advice, so I need to walk a very straight line. But the point I'm making is that you have a growth mindset, so it's capital gains, for example. Start with sectors, which sectors are likely to have growth compared to other sectors. And then within those sectors, because remember, at the NSE, we have almost 11 or so sectors, different sectors, banking, insurance, manufacturing, telecoms, investment, etc. So you need to look at those. And that will give you a good sense of which shares are best placed for me to invest in from a growth perspective. I think the other dimension to look at is liquidity. Liquidity, by that I mean, is it money I'm putting in to either earn a dividend or earn some growth, but maybe 6 months down the road, I need the money. So in which case, I am investing to get some dividend, to get some growth, but I also want maybe 6 months down the road to liquidate, sell, and use that money to do something else. Maybe pay for school fees, I don't know, pay for holiday, maybe buy a house, whatever it is. In each case, you might want to say, which of these are very liquid so that when I do my investments, if I want to sell and sell very quickly, that's possibility. Now, you can get all this sort of advice by looking at all the information that's published by, of course, NSE does some publications through its website and also through its social media handles. Business Daily is a fantastic source of information, as well as podcasts like this one. Of course, speaking to your brokers, your stock brokers, is a good source of recommendations on where to invest and why you're investing, how you're investing. I think I can't finish this question without saying listening to podcasts like this is going to give you a sense of where to allocate your capital. Okay? But the point I'm making is that first starts with, why are you investing? To make a return, for liquidity, for capital growth, for dividends, and then you can use that as a basis to make an informed decision.
Let's turn to your 5-year strategy, which ends in 2029 as we near the end of the conversation. And for me, you've made quite a number of changes in attracting most of the retail investors, which I like. Again, the focus of this podcast in itself is the individual and the retail investor here. And one of the biggest things you've done is that allowance to buy just a single share. And for me, the question here is a two-part question first.
Okay.
What are the results you are seeing coming through from such initiatives?
Okay.
And what more initiatives can we expect from the NSE going forward?
I like this question because I wake up every day thinking about the NSE strategy and our implementation of it, because at the end of the day, that's really what will make or break our push to grow this market. Let me start by saying our new strategy for 2025-2029 at the NSE that was approved by the board last November speaks to 3 strategic objectives. The first one is to revitalize the markets, which I will come back to. The second one is to harness technology. And the third one is to optimize organizational effectiveness. So an inward-looking objective to make our processes, etc., more efficient and more effective. If I go back to the first strategic objective, which is to revitalize our markets, in the core of that objective, or the tip of the spear, if you like, is to get retail investors back in the market. So individuals like you and I and the listeners of this podcast. In order to get retail investors back in the market, first we need to be able to explain to them the opportunities that exist in our market. Number 2, we need to make it easier for them to open accounts and actually start trading or investing in our exchange. And number 3, we need to continue to bring more products and listings so that they have even more opportunities when they come. One of the ways that we've started to make it easier for them to come to the market is what you've just mentioned, which is saying, yes, we've had a rule since the beginning of time. By the way, NSE is one of the oldest exchanges in Africa. Yeah. We celebrated 70 years anniversary last year. So over that long period, more or less, you could not invest in the NSE if you're not investing at a minimum 100 shares of buying 100 shares of any given listed shares. Yeah. We changed that rule 2 months ago or so, where we said you can buy one share. What that means is, really, in this country, at a minimum, today, given some of the price of some of the shares on our market, in fact, even with 5 shillings, you can actually participate in our market.
True.
Okay? So the conversation now is no longer about you have to have tons and tons of money to invest at the NSE. The beauty about that is that before we even made that change, we listened to the market. They're saying it's very expensive to come to our market. I need a lot of money to invest. The NSE is for rich people, all these sort of things. So what are these changes we need to do, basically, to make it more inclusive? That is already bearing fruit. We are seeing a lot more retail investors, a lot more liquidity in our market, more people opening accounts and actually investing. We think that will actually go up as we get more people aware of it. Number 2, we are running a lot of financial literacy programs, including engaging with forums like this to spread more awareness about the opportunity that exists in our market. How do you open an account to trade on the NSE? How do you start trading? How do you buy? How do you sell? Okay, what are you looking for? These sort of things to drive that financial literacy and awareness so that it is much easier for people now to wake up every day knowing, okay, you know what? If I have some spare cash, I'm going to invest at the NSE. Yeah. Interestingly, by the way, it's not really that complex in the sense that today, if you're a Kenyan, if you wake up and you use your phone, that is Safaricom, more or less.
True.
It's listed on the NSE. You can buy Safaricom shares. If you have a bank account, we have 11 banks listed on our exchange, whether it's KCB, Equity, DTB, StanChart, ABSA, they are listed on our exchange. So if you have a bank account and you are interacting with most of these banks, those are the entities we are seeing are on our market. Okay. If you are fueling your car or your motorbike or your generator for that matter, probably you're buying fuel from Total. Yeah. Total is listed on our exchange. Yeah. If today is the start of a long weekend, probably somebody will have a Tusker. Yeah. Or something like that. That's East Africa breweries. True. They might light up if you are a smoker. Yeah. That's British, American tobacco. The point I'm making is actually literally it is what you're doing every day that is actually available for you to invest in on our exchange. Yeah. The reforms are working. Retail investors are coming through. We want more of those. We are open to feedback. As we implement our new strategy, we see that expanding to even bigger and bigger opportunity for everybody.
Fortunately, with the time, I'll allow you one part in short. And for me, it's for someone thinking about the market and they want to come in. Yeah. What's the one word for them or 2 words for them here?
First, thank you for having me. Sure, we'll have more sessions going forward. My part in short is this. Number 1, stop procrastinating. Open an account, look for a broker, or you can come to our website. The list of brokers are there. You can open an account with any of those brokers or ask your friends who are already participating to recommend a broker for you. Open an account with a broker. Fund that account with whatever money you have because you've just heard that starting to invest, you can invest even in one share. Number 2, invest. Then start doing a bit more learning on how the market works. That's really it. Open an account, start trading. If you have an account and it's dormant, activate it. Okay, activate it so that you can start investing. And make a discipline of regularly investing in the stock market. The stock market has been proven since the beginning of time as the single biggest wealth creation engine in the entire history of humanity. Yeah. You have to be part of it.
True.
Thank you.
Mr. Lloyd Frank Mwiti, he's the Chief Executive Officer of the Nairobi Securities Exchange, and I hope he's had some wise nuggets on getting into the market if you're already not there in, and some of what is of importance to look at as, we navigate a lot of information or a lot of market information on how to get in. So, Mr. Frank, I thank you so much on being on the podcast this week.
Thank you. Thank you for having me, Kefa.
My name is Kefa Muirore. That has been another episode of Make Money, the podcast, and until I catch you on the next episode, remember, make your money work for you.